Our market monitor likes cloud computing and social media companies. He has names of companies that he says reflect the new reality of tech. Last time he was on, back in December, he recommended Amazon, which is up 22%, Facebook, which is up 24%, and Workday, which is 10% higher. Joining us now is Mark Lehmann. He's president of JMP Securities. Nice to have you back, Mark. Welcome.
Thank you. Thanks for having me.
So the new reality of tech, what do you mean by that?
The new reality of tech really tells a couple stories. One is you have cloud computing, which is what we saw in the Microsoft report, and companies like Salesforce and Amazon are going that way. And also, obviously, social media and what we see in companies like Facebook and others. And that's the new reality of tech. And you need to play in those large growing markets. And if you're not, you're probably stagnating and not growing the top line and the bottom line.
You still like Facebook. Tell us why you're so hot on Facebook.
I do. I think they've had a tremendous year. I think they're monetizing their subscribers in a great way. Obviously, there's over 1 billion people who check their Facebook. I like to call it the World Cup finals every day. 1 billion people check their Facebook every day. Instagram now has over 500 million users. And I think that kind of active user base and that kind of action on their two platforms is growing, and the amount of time that are on those platforms is also going up. And advertisers crave that kind of attention and that kind of demographic, and that is not slowing down. And although the stock is coasting towards an all-time high near 132 today, you usually get an opportunity when people worry that growth is slowing and worry that the margins are unsustainable. And I think those are the times you want to pick up shares of Facebook.
Okay. Next on the list is Microsoft, which had a big pop the other day on its earnings, which blew past Wall Street estimates. Would you still buy it at this point, given the price move it's had recently?
Yeah, I would. The stock eclipsed its 99 high, which is really a seminal moment for the company. They've really reinvented the company over the last few years. They still own the desktop. That's a term we don't use a lot anymore on Wall Street, but they still own that market. But their move to cloud computing has been rapid. They're investing in the data centers and in the cloud, and I think they're doing a wonderful job of getting there. As more of that business starts to mature and their kind of growth accelerates, you're going to see a multiple expansion there. Tied with the EPS move, you probably will see growth in that stock. And again, they pay a dividend, which is kind of a rarity for a high-tech, high-growth company. And that's a really important thing for dividend growth managers who get both that dividend and also get the kind of growth that we saw in the last quarter.
Everybody's got their eye on Salesforce, most especially because of rumors that they may do some big acquisition. You like the stock. How worried are you that Mr. Benioff goes in and buys a big company and may pay a lot of money for one?
He's going to buy something, okay? Probably the most interesting thing of this campaign season was when we saw Colin Powell's email talking about the Salesforce playbook. It was fascinating to me. It was fascinating to my analyst, Pat Walravens. But what the stock has done in that rumor of the last 3 or 4 weeks has gone down by about 15%. And I think nobody has done a better job of moving their customer towards the cloud. Nobody's done a better job than Mark Benioff at running his company. And I think right now you have a maximum amount of fear that they're going to do something that is detrimental to the stock, and they're going to do quite well. And I think that's a stock you want to own going forward.
We have to leave it there, Mark. Thank you. Have a great weekend. Mark Lehmann with JMP Securities.